Afternoon, everyone. So there was I thinking that what we're going to talk about today, and lo and behold, Magic Thursday's big announcement happens, and we've literally just had a global bailout, so to speak. And it's basically central banks have agreed to create either a program to lend in dollars, or in the case of the ECB, expand the existing 7-day program. So the actual announcement led to, an expected reaction of a big spike up in stocks and Bunds coming off. But as the day's gone on, we've pretty much retraced the whole move of what came through that global bailout. And so let's just have a look at, I'm just going to look at the Bund right now. Let's first go to a 1 minute chart. And this is spikes down. There was quite a few announcements for the day. We had the initial spike from 136.02, 50 ticks down to 135.55, retraced about a good 30 ticks, went sideways, and this was the main announcement here. At about 2 o'clock on the 3-year anniversary of actually when Lehman Brothers actually went bust, we had a move from 135.74 to a low of 12, so we actually had a 60-point move on that, which is a pretty big move, to be honest. And but as you can see from the chart, we pretty much slowly just made our way back, and now we're just sort of trading in this sort of narrow range, sort of creating a bullish wedge. Let's just do the trend line over here. As you can see, it's a bullish wedge over here, and technical analysis suggests that, as it is doing actually, that it was going to break out the 136.02 resistance, and we're breaking out for a 15 tick pop to the upside. And so so that's just been, so we've pretty much retraced. Well, we've actually come up 100 ticks from the low of the move, so it just shows how much confidence the market actually has in what the ECB and what they actually think of this problem, and whether something like this is really going to solve the issue. But as you can see, it's actually played technically quite well. As you can see, the 136.0102 was a good support level on the move down. This is on a 5-minute chart, and then this is the move that we got down. And then if we put a Fibonacci retracement on the move down, we sort of bounced off the 50% retracement, which was 135.69, for about 20-25 tick retrace, and then we continued going up, and then we found support at 78.6, which also coincided with the support that we had earlier at 136.01, and then that pretty much turned out to be some type of resistance until we actually properly popped. We did have a pop over here, but this is now, looks like we're permanently above that, and now 136.01 should be support. So this is the move that we've actually had on a 60-minute chart. We've actually come off quite heavily since the beginning of the week, where we're 138.88, where yields were ridiculous, and now we're 136.16. So we've had about a 270 tick move down on this Bund. As you can see, we're still in a downtrend, so the trade still would be really to try and sell these rallies, because until it breaks this trend. So at the moment, that's what I'll be looking to do. The most annoying thing was that I tried to do a play to go short, and I actually short it around 137.23. And then I sort of said to myself, I'll have 120 tick stop loss, and but it didn't actually. It actually took me out on this move, and then lo and behold, we went lower. And it's just all about pockets. It's just about how much you can sort of handle. And fortunately, I got stopped out on that one, but you live to fight another day. What can you do? It's part of the game. If you have a look at the equities as well, actually, the Ftse, actually technically worked quite well. We go on the 1 minute chart first of all. This was the initial move that we had. We were trading at 5300 and we spiked a good 48 ticks. Then we had a secondary move up, and since then we've just been ranging sideways, and we've just been playing sideways off this range over here. On a 1 minute chart, we had this level, the 133.3105, turned out to be a pretty good support. It double bottomed here, and as you can see, we had a rising RSI divergence level, so that prompted me to go long on that particular one, and we had a pretty good bounce on that, and so now we're just sort of treading sideways as the European markets are shut. If we go to the 5 minute chart, as you can see, we've been in the uptrend. We've actually moved about 250 ticks higher from the beginning of the week. But what's interesting is if we look at the 60 minutes, and as you can see, it's just in a big range right now. It's in about a 350 tick range on a longer term chart. Now, we had the moves earlier, and over here we had a nice double bottom, and on a 60 minute chart, and as you can see, the two RSI points from the first bounce and then the second bounce, we had quite a big divergence. We had a 20.20 RSI on the first bounce and 28.74 on the second one. So as you can see from this line, we sort of had a very positive correlation, positive divergence there. And I never actually played this, but just looking back on the charts, hairy hindsight, but was a good indication to buy there. Looking at this with a tight stop, you know, maybe risk, especially if you're trading this time frame, you maybe risk about 50-60 points, or if you're playing short term, just below the low of the previous bounce, which was maybe, you know, that would be a 15 tick stop over there, and since then we've pretty much rallied in a straight line 300 points, and now we're at an interesting level again as we're getting a double top on the previous high. And if we look at the divergence right now, there's a slight negative divergence, but we're actually pretty level. Like the first bounce was at 670.52 and this one is at 70, so it's a very, you know, there's not a clear indication of which way it's really going to go. But I mean, I guess you could just short it because you know, I can't really see it going that much higher, and you get a tight stop just above the high of the previous move, and you know, who knows, you might be looking at a nice move back down, but I guess we'll see how that pans out. And yeah, so that's what's been happening in the equities. Just a quick mention on Euribors. We actually had as you expect, the front months all rallied quite heavily off the thing, since the risk, you know, the risk of for people, the risk basically diminished. So if we look at the front month contracts, let me just bring them up right now. So if we look at, let's just say, the March 12, as you can see, we were trading at a low of 68 on the March 12, and we rallied a good 13 fat ticks. And as you can see, that was the initial move we had down, and then afterwards now we've rallied the whole amount up as safeties come back into the market, well, at least temporarily. And this is what the ECB are saying. And the spreads actually stayed in line pretty well. You know, we trade from the March 13, June 13s, we traded as high as 8.5, but then we came back to 7.5, traded very nicely. June 13, Sep 13, that went up to 10s. Actually shorted quite a few 10s when it went up there. It actually stayed beautifully in the range, but I got what do you call it, messed up quite a bit trying to leg in and leg out, because there was a lot of thin order, just a lot of bouncing around, and it was quite difficult in that way. But just managed to end up small up really today. Should have done better, but that's just the way it goes. But anyway, it'll be interesting to see how we open up tomorrow, especially on the open. And there's been a lot of developments. 208,000 contracts trading on that March 12th today. It's quite a bit, and we'll see how the market pans out from here. Is this like a reason to continue rallying, or in stocks and come off in the Bunds, or are we going to use this as an opportunity to buy back our shorts and then take the reverse view? I guess only time will tell. Till next time,